Real estate developer Signature Global has announced that 2,700 crore rupees worth of sales has happened from its titanium SPR project in Gurgaon. The property offers premium residential units. We'll discuss this and more with Rajat Kathuria, Chief Executive Officer at Signature Global. He's with us now. Rajat, good morning. Great to have you with us here. Thank you very much for your time. Prashant this side. Could you tell us what is the total total value realizable from this particular project? What is the, how much have you done? How much inventory is there? Timeline for when you will be able to sell the rest?
Sure, Prashant. So, Sector 71 is going to be one of the significant, geographies for us, micro markets for us. This lies on the southern peripheral road, which is up to a lot of, development work by various agencies. So we have about, access to about 90 plus acres of land over here, and which will provide us development potential in excess of 17 million square foot. Of that 17 million, we launched about 2.1 million square foot about 10 days back. The response was very good. We've sold almost 85% plus, the units which we had put on launch, and that contributed to about 2,700 odd crores of pre-sales getting recorded within the short span of week to 10 days.
So 17 million square feet developable area. You launched 1.2 million square feet. 85%. 2.1 you launched, right, out of this. And you sold about 85% of this. So, what's the timeline for the development of the rest? Because and can you give us a sense on what is the total value realizable over a period of time?
So, Prashant, speaking more holistically, we are looking at a fairly sustained trend of sales over the last 4 to 5 years. If you look at our sales trend, we've been growing at a sales CAGR of upwards of 60%. And for this particular year, our target is to achieve about 10,000 crores in terms of pre-sales, of which, this project already has contributed about 2,700 odd crores. So, our overall annual target is 10,000 crores, which will be coming out of multiple projects, whether it be Sector 71 or the Sonia Elevated Corridor, or a couple of other locations. But that's the overall target for this particular year. In Sector 71 per se, we'll have like a sustained supply over a few years to come. This year, our overall target is to launch about 3.5 million square foot in Sector 71.
Okay, 3.5 million square feet in Sector 71. What's the per square foot rate there? And we hear, especially in markets like Gurgaon, etc., these sold out in 24 hours, sold out in 2 days. Is it really true, Rajat? Did you see that phenomenon playing out?
No, that's... market is a little aware because as we are doing various filings, the market does get to know that, the company is advancing with a particular launch. But yes, I think these are fairly short, within a short span, a lot of sales is getting achieved. And if you look at, the overall market as well, Prashant, let's say, even if we say about 15,000 units getting launched in terms of primary sales in Gurgaon right now, the demand is significantly higher. And that's why, you see very quick absorption on good products coming from good quality developers.
Okay,
the price point...
Yeah. Go ahead.
Go ahead.
Yeah, you're going to give us the price point. Go ahead.
Yeah, the price point for this is about, 16,000 rupees a foot.
Oh, wow.
Got it. All right. Hi, Rajat. You're sounding fairly optimistic, and, body language is telling you as well that things are looking good for the company. But give us a brief number, in terms of what is the token amount when people come to buy these projects, and how does it installments, post that? I want to get a sense about the collection picture. So if you could help us out with that.
Sure. So, Nigel, see, typically the way the payment plan is structured around this project or even the one which we previously sold is about that, about 25% payment is more like allotment come a time-linked plan. So typically on allotment, people will show up about, 9% of the overall proceeds. So about, initial expression of interest is with some, token amount of, let's say, 10 lakhs odd rupees. And then, within a very short span, once the allotments confirmed, about 9 odd percent needs to be around, 9% is paid by the customer. And, thereafter, we'll typically get into the process of registering a builder buyer agreement, post which, within a span of, 3 to 4, 2 to 3 months, we'll, request for about 25% payment from the customer. Post that, it switches on to a construction linked plan. So the balance 75% of the payment is, basis developmental milestones, which are well defined in the builder buyer agreement. So that's how, the payment cycle works for the customers. If you look at the company level, just one additional data point. So as our sales are growing, we are also witnessing a strong sales and collection numbers as well. So last year we collected about 3,100 crores, and this year the target is to collect about 6,000 odd crores. So you could say there'll be some lag effect between pre-sales and collections. But since these are all sort of, time stroke construction linked plans, collections tend to, reflect the, quality of sales or the seriousness of, customers who are buying these units. And in our scenario, both pre-sales and collections are, trending upwards on an yearly basis.
Okay, so I want to know a little bit about your balance sheet as well, Rajat. Your net debt has increased recently because of the land acquisitions. So I want to know, by the end of FY25, what will the debt be, and what are the current debt levels? Sure.
So see, as of 31st of March, our net debt was around 1,150 crores. This was despite us spending significantly more amount on land acquisition. The entire Sector 71 land acquisition happened through the course of the previous year. Most of it is owned land. There's a smaller portion of land which is under collaboration. Despite that, our net debt was 1,150 odd crores. The guidance which we've given for the current year, Sonia, is that by the end of the year, our net debt number will be less than 0.5% of the operating surplus. You could call operating surplus to be a little akin to, EBITDA, not exactly EBITDA, because, accounting is more back-ended, in real estate. So we can't really do a debt to EBITDA, but, we tag it to operating surplus. And, the entire net debt will be less than 0.5 times an yearly net surplus, net operating surplus for the company. So we are very comfortable on the, leverage levels of the company as of today.
Got that.
Just one more question, if you will.
Sure.
Are you now going to look at only premium, or because when you started, you were you started on the affordable side. So have you also now pivoted completely, or what's the plan?
So, Prashant, if you look at the previous year, we sold about 4,600 odd units at an average, unit ticket price of about 1.6 crores per unit. So that's how, we clocked about 7,300, close to 7,300 crores of pre-sales in the previous year. We'll continue to play across the spectrum. So starting with, mid-income homes, which you could say, in our definition, let's say their starting point is about 1.25 odd crores, and going up to premium segment where products are priced, let's say on an average about 5 odd crores. So we intend to play the entire spectrum. And while there's some bit of competition, we are seeing on the premium side, with, more developers coming in, that mid-income segment where we'll do a lot of supply in this year and are hopeful of good absorption. There's very little competition. So we'll play the entire spectrum, to answer your point.
Okay, we will let you go on that note. Thank you so much for joining us, and all the best with your business. That is the word coming in from Signature Global. It's been a very strong performer actually. In the last 6 months, it's up 65%. But don't lose sight of